Hello and welcome back to Momentum Investing Club. Today is 22nd of September and I'll cover a concept today called value investing versus momentum investing. Not a very new concept for most in terms of value, but yeah, today we'll go over what exactly investing means and how does that compare with momentum investing. Before we get started, here's a quick disclaimer. I'm not a registered investment advisor and the content that I share in this video is purely for educational purposes. So, yeah, please do not take this as investment as advice and just for learning purposes. So, yeah, let's get started. So, there are different philosophies or methodologies which one can choose when investing in markets, be it growth, be it value, be it momentum, be it contrarian, or multiple others. The focus about any or value for any methodology depends upon the profit it generates. The goal of every investing philosophy is to generate profit. In some sense, we can argue that it's also to preserve capital or stay safe from drawdowns. But for the sake of simplicity, let's today consider the main goal is to generate profit. And in terms of generating profits, we'll go over two methodologies that are well known. Well, one of them is at least well known, which is the value investing, made famous by legendary investor Warren Buffett. And I would say so notable, but yeah, since gaining popularity is another factor called momentum. So we'll compare these two today and to get up with the basics. What exactly does value mean? In simple words, value means buying stocks which are below their true value. So you find if there's a disconnect between the stock's potential price and its current price. If there's a mismatch between the two and you see an opportunity, that's where it's a value pick. And in terms of momentum, it's completely opposite of that. You just identify which is the strongest stocks and you buy those. So you see which is the strongest stocks in the current markets and you see if it's in the current trend and you just pick on that since you believe that this particular stock will continue to outperform others. There's a quick side by side difference between both of them. So if you look at in terms of philosophy, value has the philosophy of, let's say, you buy any stock at a lower price and then you'll sell it at a higher price. In terms of momentum, it's you already buy it at a higher price, and the objective is to sell it at an even higher price. So, in terms of value, all the decision making is based upon finding stocks that are mispriced. So, if you believe a certain stock has potential of being 1,000 rupees and currently it's priced at 500 rupees, then it's a value pick. Whereas in momentum, it's purely finding out which is the strongest stocks and holding on to them without any other due consideration. The duration of holding these stocks, well, in terms of value investing, it's a long duration, spans over years or even decades. We have seen some notable investors having value picks for more than a decade now. And in terms of momentum, the duration is somewhat, I would say, medium to, but not too long. Since once a stock starts falling and it loses its strength, it will go out of from the momentum pick. So for duration in terms of momentum, it lies between months or years. To go over what kind of mindset a person needs when going into these investments. So for value, it's a slow kind of a move, and the other person needs to be patient to see the proper appreciation in terms of stock price. And in terms of momentum, it's a quick call. So since the stock is already showing potential, we buy into it. And if it continues in that direction, we keep on holding until it does. And if it starts falling off, it exits our portfolio right away. So it's quicker. And I would say a lot of duration needs to be held on. The basis on which these picks are done. So for value, it's purely based out of fundamentals. So what fundamentals? Every investor has their own preference. There are thousands of fundamentals one could choose from. Be it P ratios, there's revenue, there's EPS, the earnings growth, etc., etc. I'm not too sure about what value fundamentals investors look at, but yeah, there's totally based on fundamentals. And in terms of momentum, it's purely price action. You see what the price is doing and you buy that. That's it. It's pure price action. In terms of portfolio turnover, in terms of value investing, it's a lower turnover since you just hold on to stocks for a longer duration, and there's not a lot of churn that happens in your portfolio, so you save on the costs. But in terms of momentum, you find stocks that are in the trend, and once if they do perform, they stay until they perform. Once they drop off, they exit. So there's a higher bit of churn compared to value in terms of a momentum portfolio. Let's go over this with a quick analogy of, let's say, buying a car. Let's say you're in a market to buy a new car, and there's two approaches. You can see what, in terms of a value pick or a momentum pick, we'll go over that in a quick analogy. Yes, you can ignore the car in this image. It's purely for representation only. So the value car in this suggests that the main motive behind this car is a price that is being taught here, which is price starts at 15 lakhs. So you can say this price is currently at a discount compared to its rivals in this same segment. So you can say other cars in this segment are around 16 lakhs, 17 lakhs, but still this car has the same features that other cars have. This at that point becomes a value car since it's a price arbitrage that you're looking at. And in momentum, the game is completely different. Here, the ad itself is car of the year. So you already know that what the market is saying, what the trend is showing, what's the best performing, what everyone prefers. So you just buy into that. It's not about what the car is offering or X or Y or Z, but it's purely what the market suggests. And in this case, a new car is the momentum car. Now, there's a quick concept about Bhav Bhagwan Che, or also called as BBC principle. I've heard about this from Alok Jain, who's also a very good momentum investor. So, what exactly Bhav Bhagwan Che means is price is God and ultimate, and we do not assume that we know any more about market than the market itself. So, whatever the price is, we accept that. We do not make assumptions that okay, this is mispriced or this is higher priced, overpriced, this is valued at an extreme, this is lower valued. So whatever the market showcases, we stick to it and we follow the market. So that's the entire principle behind this, and highly followed in momentum investing. And yeah, that's what PBC principle means. Now coming to an end, which is better out of both of these? Well, the short answer depends. It depends upon the investor sentiments and what the investor is looking for. If if he's in the long haul, is he looking at his portfolio churn rate? Is he okay to go for a bigger drawdown in case market follows? So this is completely market agnostic, investor preferences agnostic. But yeah, what to choose is completely dependable. You get to see what each of these methodologies offer, and yeah, you can make your own decision. Yeah, and if you like this stuff, here's a quick little shout out to momentuminvesting.club. This is where I share my own portfolio, which I've created using momentum methodologies. And I share what's in those portfolios that gets rebalanced every month or week as per market conditions. And yeah, if you would like to check that out, do visit momentuminvesting.club. And yeah, last but not the least, if you like this, leave a like. If you found this helpful and need a friend would love this, share it ahead. Liked it too much, you can subscribe. And if you have any thoughts or any doubts, do comment. You can do all of the above as well, but yeah, you can stick to one. That's it for today. I hope you enjoyed. Let me know if you have anything else. Thank you. Bye bye.